And now we'd like to welcome Rob Lees from Mortgage Choice Blue Mountains in Penrith. Hello.
Hi, Rob.
Hello, how you going?
We're going
Good
well.
to be here. Yeah, good.
Thanks for being
Long
here.
time no see.
It has been a few weeks, hasn't
Yeah,
it?
well, it has been for you because
Yeah.
you've just been back. And I love today's topic. You're going to talk about the next wave of disruption.
Yeah.
I love stuff like that. So what are you talking about?
Yeah, a little bit futuristic.
Yeah.
I mean, the word disruption is a loaded term.
Oh, isn't it?
And it's
I
more
have to say, I
about
really like it.
the technological revolution. And if you think, for example, Uber.
Uber.
Yep.
I
The way
love
that's
Uber.
revolutionised the taxi industry.
Oh, yeah.
The two are still operating side by side, and then of course we've got Airbnb. It's changed the way we access accommodation. And there's a whole bunch of
So
other
true.
things that are out there. There's an iPhone app called Helping Hands. So you need a job done around the home, you put it out there, and it's basically putting it out to market, and you get all these responses with different quotes coming back. And there's a whole lot of things that are happening, and this is happening
that.
also in the financial services industry.
It's almost like information overload, isn't it?
Yeah.
Now that the internet's there, I mean, gone are the days of the old Encyclopedia Britannica.
Yep.
But because of the internet, it's just information overload.
Yeah, and it's this next revolution, if you like, is about technology. So
Yep.
it's changing. It already has changed, but it's gaining momentum. It's changing the way that we're going to interact with financial service providers.
Yeah, so talk to us about that. What exactly
Yeah.
are you
Well,
predicting
it's,
for
You've got peer-to-peer.
If you
as
imagine
one.
it like this, right? And
Yep.
also, if you think back to the biggest disruption, the first wave of disruption in financial services was the introduction of mortgage brokers.
Right.
We used
Yes.
to deal directly with the banks, and then there was the
A
intermediary.
deregulation,
The mortgage broker came in. The Aussie John Simons came up,
Yep.
said, "Aussie,
We'll
we'll
save
save you." And then mortgage brokers came to the scene, to the point now that more than half of mortgages are originated through mortgage brokers.
Mm-hmm.
But this next wave is now going to be about technology that could, in fact, bypass the banks and bypass mortgage brokers as well. So
What I'm going to say though is I hope is that with this technology model that we're seeing in so many areas now, that they improve their accessibility for
the consumer?
the consumer and consumer interaction. Because I ran an online business and we had our phone number and we had a live chat and we were really accessible. As soon as we got an order through, if it didn't look right, we would call people. Whereas I'm finding increasingly frustrating
Yep.
when you need to speak to someone or get some help, and the hoops that they've just engineered right from the get-go to not talk to the consumer.
Well,
they really don't want to talk to you.
And that's a
And
disadvantage.
that's a real disadvantage.
Because the only thing that will give them the leverage,
Yes.
as they say, is efficiency. And
Correct.
when we're talking about, and this is the term, and you'll actually see it now that we've talked about, you'll see it everywhere, Fintech, financial technology. So the Fintech revolution.
Right.
And once you start looking for it, you'll see it everywhere in all the media outlets. So it's called the Fintech revolution, and it's all about leveraging of technology and data to actually create more efficiency. So this is where it's at. People want things done faster.
Yep.
They want more efficient access to services. So it involves investments, it involves insurances, it involves the way that we interact with our banks via our iPhones.
Yep.
So,
Yeah.
our
But
bank is done on
they just
iPhone.
really have to improve the service.
And I think that's
Yeah.
the thing that's going to hold it back unless they can do that. And it also, this is the big one, it also is changing the way that we access funds. So it's traditionally been through banks, and the banks are being bypassed through what we call, and we've heard of the term crowdfunding.
Yep.
So crowdfunding, peer-to-peer lending, marketplace lending, all of that is the same.
So can we
kind of
break
thing.
that down?
Yeah, sure.
So what is peer-to-peer lending? Is there a site that you've heard of, or what is peer-to-peer
peer-to-peer lending? And again, now that we've talked about it, you'll see it everywhere. Okay,
Yeah, probably.
So everyone's it's being talked about it, and what it is when the bank won't come to the party. It's a project. It might be a business project or whatever, might be funded through the crowd, and it's basically putting it out to market in a very simplistic sense. If you imagine someone who comes online and says, "I need money. I need $10,000 for whatever it might be. It might be to buy a car, or it might be a business project, or whatever it is."
It could be
And
there's
then,
even a lot of
I'm right
personal
at this
things.
point, right this moment, in this very
So-
thing, considering
so you need-
putting out to my peers,
Out to market.
out to market of what we want to do.
That's
Yeah.
what it is. And
Yeah.
then
It's scary.
investors come back and
Yeah.
they'll say, "Yeah, we'll invest in this. We'll lend you the money."
Yeah.
So it could be as simple as business to business. So it might be you need business, and I decide, okay, tell me how much you need, Andrea. Pitch it to me like you do to the Shark Tank.
Yeah.
And I say, okay, I'm going to give you $50,000 toward that.
Yeah.
And then we set a rate, and it's kind of done that way. Except it's done through an intermediary, which is this software platform, and this is where the fintech companies are coming in.
Yeah.
And it's taken off more in Australia in terms of more unsecured type lending. And there's a bunch of these. Payday lending, which has a bad reputation. Money Buddy, which went bankrupt. So
I'm feeling
they're those short term.
But there's other,
But
there's other ones. There's
but crowdfunding, the crowdfunding sites. I mean, there are people in there who want to have babies. Help us raise money for IVF. Like whatever it is, I think it's I like the model because it's just up to the people looking
with
to
those
decide.
Kind of things. That's where I was going to say before. I think on the personal and the social aspect of I need my friends to help me out. I need to seek IVF. Those kind of things. You're not expecting a return. But the example you used, if Andrew needed $50,000 and I'm going to invest it.
That could very well be. Now, it may not be the one-on-one, so it might actually be, here's the so this is the platform that does it. It's basically marketplace lending. Here, it's you need in a market, you need a buyer and a seller.
Yeah.
So it's putting them together.
Or you could just try crowdfunding. I mean, I'm just looking at the whole principle at the moment. So whether it's just crowdfunding that will appeal to a particular section of the community.
But when things don't go right, that's just screaming at me.
And that's the next thing to look at. And there are risks. So you've got two parties here. You've got the investor, and you've got the borrower.
Yeah.
So the investor has to look at this as an investment opportunity and has to weigh up the risk of this.
Yeah.
And because they're putting money into it, and then the borrower, of course, is wanting to get the funds. So it has to work out well for both parties. And the fintech provider is the one that provides the platform for that to occur.
So the rules of engagement around that sort of relationship.
And that's the thing that has to be checked out.
That's what scares the bejesus
So the advantage, if you're talking about pros and cons, and the pros and cons, the advantage is the investor is going to get a better return for their money. So it's very hard to get a good return.
Successful.
Yes, if it's successful. And that's the downside. So assuming it goes well, if you put money on a term deposit, if you get 3%, you'd be jumping up and down with excitement. You'll probably get 7 or 8% on one of these. So it's good return there for the borrower. They bypass the banks.
It's good return, but it's high risk.
They get their money, and it's a simpler, more efficient process. On the downside is the risks.
It's funny, isn't it? I'm very much a half glass full girl.
Yeah.
But I don't know. This just and maybe it's my.
Well, like anything, it'll unfold, and and the media will jump on story. Like we'll know when the thing. We'll learn. It is early days.
And I guess
because how would it affect the mortgage broking? Like would people actually do this to get home loans?
I want to sound a warning because there are a downside, and the downsides are that for example, for the investor, the return might be good, but what if the borrower defaults?
Yeah.
Where's the recourse? And you might lose all or part of the investment. Are the credit standards, because you're relying on the credit assessment standards of the
when there's
fintech
so much
company?
Legislation and regulation going in the banking industry,
is that standard going to be high enough? So there's those sorts of risks for the borrower. Some of these, again, they're popping up everywhere. Some, like Money Buddy, have gone broke.
But if you look at some industries, they've been functioning for a really long time, and they already work in this sense of funding. So look at films, documentaries, movies. They need investors. They've been around for a couple of 100 years.
I like that concept.
But it's risk. Yep. There's definitely risk because you could sink some money into film that's a major flop, and you won't get a return.
And with any investment, as we know,
that industry works.
There's always a risk, and you've got to weigh that.
And I guess it's sort of, but it's drilling down to this. The ASIC money. What's that ASIC site? Smart Money has some information on this too that's worth looking at, and that outlines a lot of the questions that you need to ask to sort of evaluate the risk.
Because
on
that's
these
kind
sorts
of one
things.
industry that I can think of where it's functioning, it's been set up for a really long time, it's working, and there is just that blatant risk. You just may not get a return from this film, or it could go gangbusters, and your return will be 400%.
And generally in financial services. the bigger the risk, the bigger the return.
Yeah.
So not everyone's in a position to actually lose that money. So
look at the Blair Witch Project.
But it does. So
wasn't it like $250,000 to make or something, and didn't it rake in $300 million or something? Anyway,
so they're things, and it might be projects like that are. It just means that things are changing in terms of how we do this. I think for us as the mortgage broker, I think we need to sit up and take note. There's a survey carried across banking executives. 96% of them saw this as something that's got some life, and they needed to address it. But only 13% of banks had done anything about it. So I think as a mortgage broker, I think what it says to us is that if people are going to access this online, great to hear you saying, Andrea, the problem with this is the lack of personalisation.
Yes.
Because that's what we bring.
Yes.
And it probably underlines the fact that our customer service, the level of our customer service and advice is what's going to set us apart, and that's what we've got to work very hard on.
And I believe that always has in our industry. I do think that's not necessarily seen at a consumer level, but I think it's going to continue. But I think, look, you always want healthy competition and you always want to remain ahead of the game, and I think that new ideas and things like that are always definitely worth considering. The thing for me is taking securitized lending out of securitized lending into that space. I think it's a great idea for where you mentioned your films or budding businesses that need a bit of a helping hand to get up and running, those kind of things. But if I needed to access funding to buy a house through that method, I just don't know that's...
It hasn't come to home loans yet, but it's coming. From what I read, there's still online sites, but it's something that is coming in terms of business lending. And this prompted this stuff all came at me, and I thought, we'll talk about this. It was actually from a mob that were promoting an investor who had 3 waterfront properties on Pittwater. These were being put up as security. Here's the deal, they said, 7% return, 50% LVR, and this is what they want the funds for a business project. We need investors. Yeah. And basically this was the platform putting the investors and the borrowers together. And look, it is going to happen. The extent to which it'll go is the unknown bit.
Wow.
Interesting
Thanks,
topic.
Rob, for that very interesting topic. No, but I agree with you. It's it's something to be addressed, and it'd be interesting to watch this space. So if anybody did want more information, obviously that's not that you're happy to discuss further.
Sure, I haven't played in this space. I'm just seeing a lot of it, and I just did some research. But you could do some research on the net. But certainly that Money Smart site at ASIC is a good place to start because it's always very balanced.
I was going to say, smart. Is it smartmoney.gov or something?
Yeah, that's right.
And if you wanted
Money Smart.
If you wanted a traditional home loan, obviously they could pop down and see you at Blaxland on Hope Street there. Of course. Or they can give you a call on 47399749.
And we give advice, personalised service.
Personalised service with great
advice. Definitely. Well, that's all we have time for today on the business show.
I just got to get a couple of these dates out. Don't forget we've got our networking function on Wednesday morning, $10, hosted by Australia Post and Star Trek.
Yes.
So that's at the Lappy at 7:15 for a 7:30 start. And then we've got a great speed dating night on the 23rd of May. That'll be on the back of launching our Pink Business chapter. So, and don't forget the 10th celebratory anniversary dinner on the 3rd of June. For any of those events, you can go to the Chamber website, bmchamber.org.au, and click on to events and through to the booking page, or you can always call Julie in the office on 47875307. But we are out of here. It's a full packed show.
Thank you,
today, everybody.
Thanks, Pete. Thanks, Rob. See you next week.
See you next week.
Bye, everyone.
See you next time.